Now, trading is about knowing what to do and applying what you know how to do. So in this video, we want to look at trend reversal using the Fibonacci tools. Trend reversal using the Fibonacci tool. It is very important that you know how to identify trend reversal so that you don't make a profit and end up losing the same profit that you have made back to the market. And one of the ways to avoid such stress after waiting for a set out to play and then you end up losing. I know how it feels. That is why this particular topic is very, very important. So let's begin with a simple. We first assume that the market is making a higher high for an uptrend, a low, a high. Remember, this is a notebook example. It might not be perfect like this when you are looking for this on a chart. So from this illustration, you will agree with me that it is confirmed that this market is in an uptrend. Okay, so now this is how a market moves. Now, having established your trend, remember the first movement we have this. So these are our structural points. We have that, and we have this. What we are marking now are structural points. Okay. Alright, so what are we having here? We have a low, we have a high, we have a higher low, we have a higher high, right? Then here we have a higher low, higher low, higher high, and a higher high, which established that we are in an uptrend. Great. So now, having established this point, we need to know structural candle that are formed at this point, and it can be a pin bar and a bullish engulfing candle. Okay. But what we want to discuss basically is we want to identify our trend reversal using Fibonacci tool. So for you to be able to identify a reversal, you need to know your range. And what is a range? The range is the distance between here and here. So from here, this first low to this first high is our range. Because for you to fib, your fib is from range to range. In other words, from one leg to the other one. So this is the first leg, second leg. That is how we identify our range. So what am I trying to say in essence? From here to here is our first range. From here to here is another range. From here to here is another range. From here to here is another range. So our fib is range to range. Okay, and so now that we have established this range, it's just like you are fibbing only this leg, this particular leg. That is what we want to fib. We want to do our Fibonacci on to know when has reversal commenced. So we say we want to know what? We want to know trend reversal. Okay. So for instance now, this is the leg, right? Here is the range we want to fib, this particular candle. So what do? You go to your indicator tools and then pick up your Fibonacci tool. You will now draw it on your range. You draw the Fibonacci tool on the range where you want to fib. Okay, if you are placing it, you do it from body to body or from week to week. So now it is clear. We have fibbed the range. Okay, and then you will see that the level of our Fibonacci, you will see that we have 0, we have 100, 78.5, 61.8, 50, 38, 23. So those are our Fibonacci level. Now I want you to watch out for this carefully. I'm going to increase the size a little. I need you to observe what I want to do. Now, you will know that price move before forming this leg. The next thing price will do is that price will now come here come to this point. That is, it has formed to this level, and then it will begin to retrace, to begin to come down gradually from that level to start coming down. So the question is, how do you now identify that this particular trend has begun to reverse from going up and it is now coming down? How do you identify this reversal? There is no better way to identify reversal than using the Fibonacci. Remember, reversal is not a change of trend direction. Reversal is not a break of structure. Reversal means it has bought for a while or sold for a while. People are beginning to take profits, and then the market will need to break down before it will continue its movement to the upside. So price is here, and now it has started coming down gradually. So the first level the price will come after it has started moving in the opposite direction, that is against its initial movement, is 23.6 level of the Fibonacci. Now look at it here now. You can see that right now the price is at 23.6 level of this Fibonacci, right? Good. So any moment the price gets to this 23.6 level, you should know that a reversal has commenced. And once this happens, the tendency of what will happen is that from that level, there's a high possibility that this price now will come, tap on that zone, on that 23 level, and then turn back from here and begin to move to the upside. That is one. But once price get to 23.6 and more, a reversal has commenced. Okay, just this video is for you to be able to identify reversal. That is one. Then secondly, it can move from that point to 38.2. It is still a reversal. It can move to 50.0, like where it is now. It is still a reversal. So from this zone, it can decide to reach here, give you a signal, and then reverses back and continue its movement from here and begin to go towards the upside. So any of this is possible. Secondly, it can continue all the way to 78.5. It will come here. Remember, it is still within your range. Hit it, tap on it, reverse, and then continue to the upside. And at times, it can even make 100% retracement up to the point of 100. Tap on it and then continue back to the upside. So this is how to identify reversal. So a reversal begins once price gets to the level of 23.6 of the Fibonacci level. Okay, very important. So take note of that. Now this is our leg. Let's take the leg back to its position. Good. So for us to have this, and then after the formation of this leg, that is why it comes to this level and then reverses back. So if this first leg has formed, the second thing that will be forming is the second leg, which is this range. And once it has reversed, for you to know that the reversal has commenced on this leg, is when price return to a level of 23.6. Can you see it? Remember we said we are moving from this to this, and look at this one. This one reverses at the level of close to 61.8, and then it moves to the upside, but immediately it breaks the level of 23.6, which shows that the reversal has commenced. So if this should have closed below 100, the 100% retracement, we will say it has break structure, or we say it's a change of structure. Okay, that is as simple as it is. Now, if you have made your entry at this point, based on our exit rule, you make your entry at this point. Based on our exit rule, you will have to establish an imaginary trend line. You put this trend line and then you just draw it. But mind you, as at when you have this trend line, this second leg have not formed. So immediately this higher low was formed, you will now adjust your trend line to be touching that point. So I'm indirectly teaching you how to draw trend line now, right? So that is it. And then if price break through it, you exit. But that is not the goal of this class. Now let's look at how we can identify this move we are talking about. Remember, the price moved from here to here. Now this is our first leg, and we know that this price is moving in the up direction. So what do? All we need to do is that we'll carry our Fibonacci tool and fib it from this place to the top. So mind you, if you want to fib it, is a two-way. It is either you are fibbing week to week, that is the rejected part, week to the week on this side, or you are fibbing the body to the body. Any of this you do is correct. So I will now take my Fibonacci, put it on this week, and then set it on this other week at the top. So good. So you can see now 100 below, 0 at the top. And you can see that price return and break through 23.6 level, which tells me a reversal has commenced. But you can see how it keeps on coming down, coming down, coming down, coming down, all the way to around 78.5, where it gave me a rejection, a pin bar, and then I will know that okay, with this candlestick indicator and knowing the trend of the market, and at this point now that price is at my discount area, disadvisable, I can go long. Then you can buy and put your stop loss at this low, below the first leg formation. Why we are putting it below there is because we can have 100% retracement back to the base. So having established that, we now have a new formation of leg, which is this one and this one. Okay, let's forget about the perfect move of the structure first. No, the most important thing is how to use your fib to identify reversal. So what do? What we do is, we know that now here is our new move from that zone to this zone. So now carefully carry our Fibonacci indicator, put it on that wick, and then on this other wick. Perfect. Now let's look at what happened. Now do you see here, price retraces all the way to, immediately it breaks through 23.6, a reversal has commenced, and then from around 61.8, even on a lower time frame, these things happen. Let's look at M15. Now look at this. If you look at this scenario critically, you will notice that this market has been making a series of higher high and higher low. This is a low, this is a high, this is a low, low, high, low, high, low, high, low, high, low, high. Okay, and now that we have established this, we can now begin to tackle each level by level. So now what do? We can say now that we'll flip this high to this level. Now make it a bit longer. And then what can you observe? You will observe that the price move from here to this high. Look at it, it break through 23.6, which tell us a reversal has commenced, and then it continue. Then the next one, it break through the same level, it reverses 23.6, it move. Then this leg, it break through, come back inside it, tap 50 level. And I believe you are getting value from this video. Please do not forget to subscribe, like, share the video with your friends and your loved ones. So please go through backtest this strategy. I want to know that no strategy is a holy grail. No strategy is 100% accurate. Okay, but I know, and I know that whatever I share here has a high probability of winning rate if you apply what you learn diligently. Out of 10 trades, I am sure that 6 will play out. See you in the subsequent video.